Hey everyone, it's Jacquelyn Melinek. Welcome to Chain Reaction, a show that unpacks and dives deep into the latest trends, drama, and news with some of the biggest names in crypto, breaking things down block by block for the crypto curious. Today's guest is Chris Dixon, general partner at the venture capital firm Andreessen Horowitz and founder of its crypto arm. He is also the author of the newly released book, Read, Write, Own, which we are recording on January 30th, and it's the same day his book is released to the public. So we're super excited to have Chris on to talk about it in basically Chain Reaction's first ever book review-like talk. With that said, Chris, welcome to the show.
Thanks for having me, Jackie. I appreciate it.
Yeah. And before we get started, we always like to ask our guests this. You've met a lot of people, invested in a lot of companies. And if you could share, who is one person in crypto that you've spoken to in the past 12 months that has inspired you, and what did you learn from them?
Oh, wow. That's a great question. I'm lucky enough in my job to, basically my job is to meet with interesting people and to meet with entrepreneurs and to learn from them. And a lot of my book is like the distillation of things I've learned from them. So I'm not trying to dodge your question, but it is sort of like it's sort of my, like frankly, the great thing about my job is that you just get to meet with a lot of high energy, really intelligent, creative people. I don't know, like we live in we can talk about it more as we can maybe get into the book, but like I feel like we live in this era of sort of big tech. And, what got me inspired about the internet was sort of people starting out with fresh ideas. And I always, that's what brings me energy, is like meeting those folks and hearing their new ideas. So it's hard to single out one person.
That's fair. And honestly, as someone who interviews a lot of people in this space, I feel the same way. I'm energized by a lot of founders, ideas, things like that. And some calls I'm like, all right, I could take a break after this. But other ones I'm like, I want to get working, And on the topic of Read, Write, Own, we will get into the big tech part, but maybe this will answer that question. Why did you even want to write this book? What inclined you to do this? Tell us a little bit about that.
Yeah. Crypto and blockchains are in the news a lot, but a lot of it is around speculation and prices. And I feel that there's another side to the story, and it's the side of the story that I live in, that the entrepreneurs we work with live in, which is what I would call the productive side of blockchains, right? How do you use blockchains to create new internet services that bring us back, that counter the consolidation of the internet, and in my mind, bring us back to the ideals of the original internet, sort of the origins of the internet as an open and democratic system, right? So I felt there was this other side of the story, and I felt very strongly that it was an important story to tell and hadn't been. People talk about it, of course, and there's a lot of great books out there on different topics around blockchains. The work you do and people in media do, and we try to do with our posts and blogging and stuff. But I think there's something special about a book that that just can reach a different audience. So, for example, like I go to DC a lot now because there's a lot of policy discussions, or just speak to people who aren't in the industry, and I literally would hear all the time, what book should I read? It's like Paul Graham always says, or Y Combinator, I think, says, build a product that you want, right? And so for me, like writing this book in some way was like, I wanted this book to exist.
Yeah.
Yeah. I almost, like if someone else wanted to write it, like it was a lot of work, that'd be great. But I just felt like maybe I was in just having been in the internet for my whole career, having been in the space for a long time, I felt like I could bring a kind of maybe, I don't know if a unique, but at least a fresh perspective. So I felt like it was something we need, and I could potentially do it. And so I took on, I was naive and thought, I'll probably whip it out in like 6 months, like it'll be a fast process. And much longer than that, just lots of details, lots of, just a lot of work. But in the end, I think very rewarding. And as you mentioned, it's coming out today. And so I'm really excited now, after all this buildup, to see, what people, I've had some people read it. I sent some advanced copies out, but really the world hasn't read it yet. And so I'm really excited to see the reaction. And I'm hoping it starts a dialogue, instead of, there's a lot of like emotion around these topics and political debates. And I'm hoping to kind of elevate the discussion a little bit. And I'm hoping people will respond. I'm sure there's things I got wrong. But what I'm hoping is it kind of frames the topic, and I think more in terms of the history and all the potential, and that is more around the productive aspects than the kind of trading aspects.
Yeah. There's a lot of noise out there that is focused on meme coins. And to be fair, there's a lot of trading volume happening there. But is that really what will bring society further? I'm not sure. I'm not the one to say.
Yeah.
But your book also has this emphasis on like the computer technical side of crypto versus like the casino world of coins, degens. gambling, etc. You know what I'm talking about. How do you think the industry or just people within the space in general can kind of fix that image to an outsider's perspective and like truly show the value of blockchain technology opposed to just people viewing this as like a big pump and dump scheme?
Yeah, it's a great question. I think that first and foremost, it's incumbent on people like me, like investors, but also entrepreneurs that we work with to build great products. And you think about AI as an example. So AI has been around for 80 years. I actually, 15 years ago, started an AI company. And actually at the time, it wasn't like crypto, bad word, but AI had kind of a bad word to it because it had been promised for so many years that they were going to. Alan Turing wrote about AI in 1950 and said that, that he thought that there would be intelligent human-like machines. And I think it was, a relatively near future. And so there have been all these promises and it hadn't delivered. But then, of course, it did deliver, right? I mean, I think like ChatGPT and all the things it's done. So for me, fundamentally, it's about delivering. We, the community that believes in productive uses of blockchains, need to deliver great products, right? So now, secondly, I do think that a lot of the kind of casino behavior, and I have a big section in the book about this, which, by the way, I think there's certain people in the crypto community who won't like that part of the book. Like I decided to write that anyways. I'm not sure it's going to be a popularity contest with some people, but I felt like it was important to call that out because I do think we need to also think about things we do to dampen that kind of behavior. And that ranges from, a lot of these I think are policy questions. This is why we've gotten more involved with policy. Like I was involved with Coinbase for years, and it was always frustrating at Coinbase that you had these companies like FTX and Binance that were offshore, that were, Coinbase is heavily regulated, BSA, KYC, all these, huge focus on compliance and security, public company, audited, and they had competitors that didn't do that and took market share. And I think those competitors really encouraged a lot of the, casino behavior. And so I do think some of this is the role of policymakers to, quickly act when there are bad actors in the space who encourage this kind of thing. But I'd say fundamentally, though, it's about building great products. I think all tech is in the end. People talk about, maybe different branding, different marketing. My experience in tech is products are everything. People really finally got AI when they saw ChatGPT. People really finally got smartphones when they saw the iPhone. And that fundamentally, we just need to create great products.
What do you think people will really get crypto with? What will be that product that would bring that in?
Well, that's what we're as investors, we're of course trying to
you set that one up.
Invest in. Yeah. So we have a wide range of investments. And so the short answer is I have a bunch of areas that I think are promising. I have found that, I for example, I was an early investor in a lot of mobile apps when iPhone came out in 2007, and I was an investor 2007, 8, 9. And there were a lot of hypotheses, like maybe, now that you have this supercomputer in your pocket and it has GPS and a camera, maybe the killer app will be this or that. And we had all these debates. And in the end, it turned out, ephemeral messaging. I think that probably surprised some people. Calling a cab like Uber. Messaging. I mean, some of the things were maybe a little bit more predictable, but some of them kind of, I think surprised people. So my experience with this has been, and I think blockchains will be similar in that it's hard to exactly predict, but you can sort of have a sense of it and make a bunch of investments. And so our investments span from, we have a bunch around kind of what we call Web3 gaming that basically use NFTs and other types of blockchain-based media to create new income streams for creative people. We have a number of things around kind of social networking, a number of investments around finance and DeFi and payments. And so, kind of have a bunch of hypotheses, and then we meet with great founders who we invest in and hope that they build those kinds of products. So I think there's a lot of promising signs, but it's hard to say exactly where that kind of true breakout will happen.
I'm sure we'll find out one of these days, weeks, or months, or years. Hopefully,
I hope so.
Sooner rather than later.
I believe so. That's why I'm doing it. But
and
I think it will be in. I think and hope it will be in the relatively near future. But obviously that remains to be seen.
Yeah. I think, you had the chapter about the casino coins we kind of talked about, and then products. Do you think there's a world where they both can coexist and it's fine that we have this more degenerate side of crypto and then we have a more sophisticated technical side of crypto? Or should we just get rid of that side?
So I think the key breakthrough of blockchains is they enable digital ownership, right? And so digital, just to maybe define that, like as an example, when you use a social network today like Twitter or Facebook, you don't own your name and you don't own your audience. And because so if those social networks change the rules or change the algorithm or decide to, take all the revenue or do whatever they want to do, if you leave the social network, you lose your name, you lose your audience, you lose everything you built. And so with digital ownership, the idea is that the user has control. The user, in the case of social networks, would own their name. In the case of a game, would own the assets they buy and build. So that's what ownership is. Now, I would sort of liken it to home ownership in the physical world. So in home ownership, I think we agree as a society is valuable.
Most times, yes.
Yeah, I mean, okay, it's yes. It can go wrong for sure, but generally, like I think people think it's it's an important thing to allow people to have to at least hopefully buy a home. Okay, and if you buy a home, that's important psychologically. There's a nice thing to knowing you can have your family in a home you own. It can be important for building wealth. It's important for aligning incentives, so you have an incentive to kind of invest in your home and improve it and improve your community. Right? I mean, a lot of reason people get involved in their communities is because they own a home. Now, as a secondary byproduct of that, we have people flipping houses and REITs and like a speculative market around home ownership. And I think that speculative market plays a role. Like the reason you can go to Zillow and get his estimate is because there's a liquid market with traders. So I'm not anti-speculation. I just want to be clear. And speculation is generally legal in most markets in the United States. But I think it's sort of a question of priorities. Like it's gotten just so much attention around blockchains and crypto. And it's sort of putting the cart before the horse. Like the focus should be on digital ownership. Yes, there will be trading and there will be some speculation, but it's not the main purpose, right? And I think that's where kind of the emphasis is off and what I am trying to sort of help nudge back on the right course with my book.
That makes sense. The book also talks a lot about big tech versus crypto, Web 2 versus Web 3. We even got Web 1 in the beginning. And I think it's really done in a digestible and understandable way. And even for, people who don't understand Web3, I can imagine, hopefully they'll be able to pick up the book and understand it. I'm sure that's what you want too. But why focus on the comparison between big tech and crypto?
Well, yeah. So a lot of times I'll hear, especially around these kind of policy discussions around crypto, like what's the societal benefit, right? I mean, it's a very reasonable question, right? Like, what's the societal benefit of AI? Like, presumably AI will help people become, give them superpowers. It'll make them more creative and let them work faster. And there may be bad things with AI, like maybe you can, people are worried you can create a bioweapon or something. And so then what we do as a policy, like from a policy point of view, right, is we try to design policies that allow for the good and disallow the bad. A lot of the dialogue today around blockchains and crypto, a lot of the skeptics will say there's no use cases, right? There's no value. Like, what is the point? Where's the societal value? So I wanted to take that issue head on in my book. And I wanted to say the reason that I'm motivated to work in this space, and I think the reason a lot of entrepreneurs I'm motivated to work in this space, is that we believe in having a dynamic, open, democratically controlled internet. And people, that's a long time, the internet was founded on those beliefs. And a lot of people, I think, share those beliefs. But the challenge is that people have said that in crypto and blockchains, but no one's, I thought, had really explained it. It's sort of it's one thing to say that, but like a natural question a skeptic would ask is like, I see this token like Bitcoin, and you say it's going to, this technology will potentially reduce the power of these big tech incumbents, but how do you get from A to B, right? And so a lot of what I try, and I'm glad to hear you said it was digestible or readable, because I worked very, very hard on that.
Yes,
yeah. Well, I mean, I worked very, very hard on that.
The general audience as well, yeah. Wow.
I hope so, because I really tried hard. This was not a book I wrote to show what I know or something. I really, really tried hard to make this a book for the reader and to make this a book that was understandable. And I really avoided jargon and other things and really tried to walk through the details. I just really want it to be readable and to, hopefully I want it to be enjoyable. I want people to like the book. And I felt like, look, I want to go and really prove to people how you make this connection between these things you hear about, like Ethereum and Bitcoin and other things, and an internet that's more open, right? So that was the challenge I put to myself. without hyperbole, without skipping steps, without relying on jargon, like walk through the details and show how that works, and show to people why, if you're a skeptic, or maybe a lot of people are just neutral. I think most people are probably neutral, is my guess. And I think those people, like, I wanted to, if they're interested in the topic, I wanted to give them a book where I could explain it. Like, this does have societal value, and that the things that people are building are not just, these sort of degen trading things. They're trying to build things that make the internet better.
Yeah. Going off that point, your book also had a paragraph or section that was about what problems do blockchains solve. And some people could argue, like, why do we need this? And you had a comparison when you were like, why have steel if we could use wood to make a home, or make like railroad tracks and things like that? And it's so true. Like, looking back, if we never really went into the steel industry, we wouldn't have the skyscrapers that we have in New York City and, every city today. I'm just based in New York. That's why I said that. But what do you think ultimately blockchains can bring us?
Yeah, so it's a great question. This is one of the challenges, honestly, in writing the book, is blockchains are fundamentally, they're tools for builders. Like, if we're successful in this movement, it's not like an average internet user is going to be sort of, clicking on a blockchain or something. Like, it's a behind the scenes technology. And that made it challenging to write, in a sense, because I have to explain sort of infrastructure, software, and networks to the general audience. But I think that, like, the analogy with steel is that it's a building material, right? It's a thing that builders use, and it's a material. And specifically, it's a material for building internet services. And one of the core theses of the book is that the way you build sort of the architecture, the design of these services ends up having these very profound downstream consequences around how the control and money and all the other important things about the internet service work, right? That's one of my kind of core arguments. And specifically, that's why I could do a little bit of the history of the internet, because the internet began with what I call protocol networks. Sometimes people call them protocols. The World Wide Web is a protocol, HTTP, that's built on top of the internet. Email is a protocol built on top of the internet. And they were architected in such a way that they were democratically controlled, where if people know this today, I think, when they have a newsletter, for example, if you have an email newsletter, you have a direct relationship with the audience, right? If you send them something and they buy something, maybe you pay a payment processor or someone else, but you're not paying Facebook some huge toll or Apple some huge toll, right? And if you don't, and by the way, the reason you're paying a lower toll is you can switch, right? So if you're on Substack and they charge you too much, you can switch to MailChimp, right? Because you control you control your relationship with your audience. And that was a key feature of the early internet. Same thing with websites. You control your web. If you have a web, TechCrunch.com, TechCrunch owns that
domain,
website.
Yes.
Yeah, the domain, yes. You own that website. You can build a direct relationship with your audience. You can decide to put ads. You can decide to charge. You're in control. And then over time, we had the rise of what I call corporate networks, which were things like Facebook and Twitter and just all the TikTok and many of the modern services that people use today, PayPal, I don't know, just go different categories, eBay. And those services are wonderful in many ways, very powerful. They have great user experiences. Many services like Google and Facebook brought free internet services to billions of people. But my argument is they came at a trade. It was sort of this Faustian bargain where they gave us all this wonderful stuff, but in exchange, we handed them lots and lots of power. Because when you're using one of these systems like Facebook, let's say, or TikTok, you can't switch the way you switch with email. You're handing them full control. Yeah. People may be familiar with those 60-page terms of service and privacy policies, legal agreements that pop up. No, I don't think anyone, I assume none of your listeners have read them or negotiated them.
Unless they're a lawyer, I don't think
maybe a few lawyers have.
Yeah.
But most people haven't. And so I think just the fact that you get these legal agreements and you're basically giving all your data away and everything else is just, to me, an example of how much control they have. So that's sort of, my core argument is how these things are designed. And so that's why blockchains matter, is blockchains are a new building material that lets you build internet services. And my core argument is that have the kind of all of the wonderful advantages of these corporate networks like Facebook and Twitter, and you can build modern interfaces and you can do all sorts of other interesting stuff, but you don't have to sacrifice the control and give it over to a small group of people. You can maintain community control. And so I argue it's kind of the best of both worlds, a blockchain, what I call blockchain networks, of kind of the two earlier network designs, and therefore can allow entrepreneurs to build new internet services that return the internet in many ways to its original ideals as an open and democratic network.
Wow, that was a lot, but we love it. And I think on that note, what I was thinking of while you were talking were a few things. One, it's like the saying that's like, if it's free, then you're the product. And then I also thought of take rates. I know you had a whole section on that and how significant that is. And we could talk about that too. And also just how what we go back to with the digital ownership. It's like in Web3, you want everyone to own their own things and like be in control. But in Web2, they want you to stay on Facebook. They want you to stay on Twitter. They want you to be siloed into their network so you don't just branch off and go elsewhere. I think on the topic of take rates, just briefly, I'm curious your thoughts on how do you think this could be shared with the general public so they could truly understand the opportunity here? Because when you think about Apple's App Store take rate, it's about 30% for in-app purchases. Facebook has its own model for whatever, ads or the way they interact with people who, basically advertise on their site. But with blockchains or projects building in the ecosystem by comparison, it's like, 2% or less typically, even if that. So how do we kind of like get that out there opposed to going over people's heads? You know what I mean?
Yeah, no, thank you for that question, because the take rates, I think, are a very important topic. Mm-hmm. As you mentioned, I have a chapter on it. I think most people probably don't even know what the word, if you're not in the internet business, you don't know what, I'm just saying most.
You can learn it,
most listeners might not know what it means. So what it means is, for an internet service, a take rate is the percent, like think of the money sort of flows through the service and what percentage of that money is taken as a toll by the internet service provider, right? And so, for example, when you use your credit card, on average, about like between 2 to 3% goes to the providers in between, and the other 97-something% goes to the person you're buying something from. The modern internet services are extreme outliers from the rest of the economy in that their take rates are extremely, extremely high. So, for example, Facebook and TikTok and Instagram, the top social networks make about $150 billion a year in advertising revenue. They put ads over the content, between the content, and they essentially share none of that with the people that actually create the content. You don't go to TikTok to see TikTok's content. You go to see some creators' content, and yet they don't get any of that money. They have these de minimis creator funds.
Yeah, but they're small amounts.
Yeah, they're sub 1% of the revenue. I have some details for those who want in the book, but essentially they keep all the money. And then Apple is relatively generous compared to the other internet companies in that if you buy something on the iOS App Store, and same with Android, 30% of that money goes to Apple for anything you buy, which is why there's this big lawsuit between Epic and Spotify and Apple, and all of these companies are very upset because it's very hard to run a business. If you go to any business down the street and you say, what if you had to pay 30% for your payments? It's just very hard for most businesses to operate that way. So it's a huge, huge tax. And so essentially these companies have leveraged their positions of strength and their lock-in. You're locked into these ecosystems. If you're a creator who built an audience on TikTok or on Instagram and you have, let's just say 100,000 followers, you're not going to leave. It's very hard to leave because you have to start over, right? So, and these services know that. And so they dictate the terms, right? And Apple, you're locked in. If you're a developer, you have to, Spotify has to be on the app, on Apple. So they leverage their power economically, but a lot of this is hidden from the public so that, if you're just a regular user, you don't see any of this. And so I think this, in some ways, this is why I appreciate the question. I think it's an incredibly important thing because it's about how all of this huge amount of money flows around. But it's in a lot of ways obfuscated from the users of these systems. They just sort of say, I used this thing and it was free. And, but in fact, as you said, there's in some sense, they are the product. I mean, the influencer is the product, the creator is the product. And then in the extreme cases like Mr. Beast, they make good money. But there's a lot of people in the middle who just don't get paid properly. Music's a good example where there's by Spotify's own numbers, there's 8 million. I mean, I said Spotify's fighting Apple, but meanwhile, Spotify itself is fighting musicians. And there's 8 million musicians on Spotify. Ends, It never ends. The 8 million musicians on Spotify, and of that, I think their own stat is 14,000 musicians make $50,000 a year or more, and the rest don't. You just ask a musician if you have a friend who's a musician, and they will almost all tell you they make virtually nothing on streaming. So it's just all set up to favor these intermediaries. And I think that And I think my argument partly is it's just sort of this, it's like the dam will break at some point. People will realize that this is not a good system for them and that we can create alternatives. And that specifically, as you mentioned, blockchain networks, one of the key features of blockchain networks, and I walk through the whole kind of economic argument in the book, is that they have dramatically lower take rates, like 1-2%, where like 98% go to the users and creators and entrepreneurs. And that just makes a huge difference, even though, again, this is sort of behind the scenes. Like if you're a regular user, you wouldn't see it, but it makes a huge economic difference. It's very, very important.
Yeah, I agree with you on that completely. And I think another point I wanted to pull from your book, I tweeted this out also, but you wrote that when the internet was first going mainstream, it wasn't even listed as a top 10 greatest engineering achievements in the year 2000. And you wrote that the National Academy of Engineering placed internet at the 13th ranking, and it was below radio and telephones at 6, which is so funny because like who has a landline anymore? I still listen to the radio if I'm in a car. Air conditioning and refrigeration was 10th. I get it. But still, I think the internet's a little more impressive. And space exploration was 12th. And like, not to knock any of these inventions, they're all big ones. But looking back, it seems so silly that the internet wasn't ranked higher. And sure, this is just like one ranking. There probably were others that maybe put the internet at a higher position. But I'm asking here, like, what phase of adoption do you think crypto is in right now? Like, because if that type of poll came out today, I don't even know if crypto would be in that type of ranking. You know what I mean? And it took a while for people to, quote unquote, get the internet and not view it as this thing for like techies or an alternative to faxing or something. So when will crypto kind of be in that phase where it'll be ranked or even appreciated to that level, you think?
Yeah, it's a great question. So I don't think, sometimes people say like crypto is like the internet. I mean, my mind is like, history rhymes but doesn't repeat. Like the internet's special and crypto's different. But that said, I think and part of the point I was making with the part you're describing about sort of the internet downturn, when I started my internet career in earnest was like 2004. So it was during that downturn from like 2001 to 6 or so, people were pretty pessimistic. And I gave another statistic I like is that I think it was McKinsey, no, it was Pew. I have it in the book. I think Pew did a study and they asked people, would you want broadband? And the majority said they wouldn't want broadband. This is like 2003, I think. I have it in the book. But the reason was, what did you use the internet for at the time? You used it, you'd go to a website, you'd buy a travel ticket, you'd check email. Why do you need that to be faster? But of course, what happened is as broadband grew, people invented video streaming, invented 3D games. And so it's sort of this, it's one thing I talk about in the book is just with these kinds of computing waves, there's a feedback cycle where you get better infrastructure and then that in turn enables better applications, and the two feed back and forth on each other. And then you get this sort of faster growth. It's like I found it's very hard to predict exactly where you are in these computing cycles. Like I said, I started an AI company in 2008, which I sold to eBay in 2011. And so clearly I was too early on that. So
but at the time it seems like it was like probably the perfect time to sell it, right?
Yeah, I thought so. And, I find the timing of these things hard. I find I personally believe it's sort of easier to predict what technology will be important and harder to predict exactly when it happens. So I'm going to, hedge a little bit on that, but I do think, I do think there's some really important positive signs around blockchains right now, and specifically, so like to give you one example, until recently, it would basically on something like Ethereum cost $5 to do a typical action, and so and what that meant was it really, really limits the range of applications you can build, right? If every time you click a like on a social network, you have to pay $5, nobody's going to use it, right? And so I think what that did is it forced. Going back to your first question about speculation, like one of the only applications you can really run at $5 a transaction is stuff like trading, right?
Yeah.
And now, with without going into all the detail, there's these things called layer 2s, and there's all these other kind of infrastructure improvements where I think we're now, and there's other blockchains like Solana where you're now seeing like sub-penny transaction costs, which means then the services can subsidize them the way they do with Web 2 companies. And so that, as an example, is a very important improvement that we can kind of measure. That I think is, we made a lot of progress there. I look at just the entrepreneurs we work with and the products they're building, and just sort of you just go use them, and they're starting to feel like much more. Just to give you an example, I'm in New York. Europe sounds like you're in New York too. I'm in New York right now, and we have an investment called Blackbird, which is a restaurant.
I know Blackbird,
service.
yeah.
You know Blackbird. Okay, there you go. This is the founder of a very talented founder, Ben Leventhal, who started Resy, which is a popular reservation service, and before that Eater.com, which is a food blog, and has built an application that involves restaurants and NFTs and things. And it feels like a Web 2, like a fully modern, and there's a bunch of those, like Farcaster's a social network that feels very modern. So we're starting to, I think, just really see a step function improvement in user experience. And so I don't know exactly when it will happen, but I feel like we're getting a lot closer.
Couple years? Sooner?
I hope so. I hope so. I hope so. I think so, and I hope so. But I'm hoping. Like, one reason I also wrote the book is I really want. Crypto has gone through cycles, and I really feel strongly that I want to see, and I obviously believe it's going to come back, but I want to see it come back. And sort of in my mind, the important thing is it comes back in the right way. It comes back and it's focused on applications, and it's focused on, new services. And that was part of my motivation, was like I wanted to share that vision and hopefully maybe nudge that vision along, because I do think, and I do feel like there's sort of this upswing happening, and particularly when I'm saying that in terms of innovation, just quality of, products and everything and infrastructure. But I'm hoping it's a couple of years. But
yeah, I hope the ball keeps rolling and maybe snowballs down a hill in a good way.
I certainly hope so. And I believe it will happen.
And on that note, we're going to take a quick break before we get into the rapid fire segment. And we are back. Now it's time for our rapid fire segment, where I will ask Chris some questions and hopefully he will give us quick, short responses. Are you ready, Chris?
I'll try. I'm not known to be concise, but okay, I'll try.
That's all right. So what's harder, writing a book or making a good investment decision?
Wow. Very different, right? Writing a book is a grind. It's like just tons and tons of time, whereas making a good investment decision, well, in some sense it's a grind. You meet with tons and tons of folks and learn a lot, but there's also a lot more luck involved and a lot more serendipity, I would say. You happen to meet the right founder at the right time. Whereas a book is just like you got to sit down and you got to get up every morning. So they're both quite challenging.
I guess that follows my next question.
Was that rapid enough? I'm trying to wrap.
Yeah. Well, this one sentence, Chris. Ready?
Okay, one sentence.
What's the worst part about writing a book?
I would say it's, I had a few times, I'm going to make this a long sentence, a few times while writing it where I thought I was making progress and then reread the book and was like, oh my God, I got to redo the whole structure and everything else. So it's just a lot to keep in your brain. And for me, it ended up being kind of this 2 steps forward, 1 step back kind of thing. But eventually got there.
Been there as a writer, so I get that. And we're not pessimists on this podcast always. So what's the best part about writing the book?
It's just launching today, so I'm the best part I hope will be getting the responses and feedback, and I hope I hope people give, and obviously there'll be some criticism, and I hope there will also be people that found it useful. So that's really exciting, just having something out in the world. I also found it a very personally edifying process. I believed the things I wrote in the book, but until I wrote it, I felt like I hadn't really proven it in detail. So I just found that kind of rigor was helpful for myself.
All right. What other book or books in the Web3 space do you admire?
I think there's a lot of good histories. So I think it's called The Infinite Machine on Ethereum. There's good histories of like Coinbase and the Bitcoin Standard, and sort of there's a bunch of stuff on Bitcoin. What else I like Vitalik's his Proof of Stake. There's not a lot of books. Like a lot of the material is, I think, really in podcasts and blog posts, probably
chain reaction
more than and chain reaction, of course.
Changing to what you do for a living, VC partner at a16z. What is a crypto startup that quote unquote got away in your investing career that you didn't make a deal on and you wish you did?
Oh, we've missed a lot of things. I could just go on and on throughout my career, not just crypto.
That's an honest answer, yeah.
Just throughout, and honestly, everyone in the industry who's honest, whether it's crypto or just generally. It's actually I think a very common experience in venture capital and just angel investing is you come in and you think I'm sort of have this magical spidey sense and I'm going to, be able to predict things better than other people. And then you just kind of have this moment where you really whiff and you have some meeting and don't see it and dismiss something that you shouldn't dismiss. So I've had plenty of those. And you saying specifically in crypto or in general, or?
I would say in crypto, but in general, if one came to mind first, you could go there.
In crypto, I mean, there's been one, I think one of our core values, I'll say, is fixing our mistakes. And so so for example, when we first met Solana, we didn't invest in the initial round, like the seed or Series A. And then we saw all of the impressive things they'd done in technology, and my partner Ali, we talked about it and we said, look, let's not be prideful about this. We made a mistake and let's go fix it, and we did that, and we managed to invest at still a fairly early stage, and that, by the way, that happens all the time. I mean I think we've got, I like our portfolio, and some of them we have early and some late. And when they're later, often it's because we didn't get it the first time, but we try to have discipline around fixing that. So
dialing back to when you got in the crypto space, what was one of the first crypto projects that you got really excited about?
Yeah, I mean, like everybody, because the first thing was Bitcoin. I got excited
Yes.
about Bitcoin. I mean, but with Bitcoin, I had a different take on Bitcoin, I guess, that didn't. Like, I was excited particularly about the programming language of Bitcoin when I got into Bitcoin. In my mind, like 2013, I saw Bitcoin evolving probably more like Ethereum is today, as a platform where you build applications. And I assumed that was the way the developers would take it. And they didn't take it that way, and that's fine. And I'm still a fan of Bitcoin. But for me, like, as somebody who is excited about kind of applications and computing platforms, which I talk about in the book a lot, I really like programmable platforms because I see programmable platforms like a computer, a mobile phone, a programmable blockchain. In many ways, it's like a canvas that innovators can come and just sort of take that canvas and paint something on it. Like, it's a creative medium. I see software development as a creative medium. Virtual reality, like I had invested in Oculus back in 2013. For me, the exciting thing was less the headset. I mean, the headsets, you need the headset, but it's more like, what will creative people do with this new headset? Like that's always the part that excites me. So for me, the evolution was sort of Bitcoin, but I saw it a little bit differently than I guess a lot of other Bitcoiners did. And then when Ethereum came out, for me, that, was a big moment. And then, and I've continued to stay very involved in the Ethereum world. And then, but there are also now, of course, alternatives to Ethereum, which sort of share the vision, but maybe take a different technical approach. And then, and then there were a lot of the early DeFi things were really interesting. I think, I think to me, things like Uniswap and Compound, people see them as the product side. There's sort of two ways to look at those products. Like, one is the product itself. Like, you can use Uniswap to do swapping, and Compound is a lending protocol. Then there's the fact that these are community-controlled DAOs, right? That they are successful DAOs. Like, their internet service is controlled by communities, controlled and owned by communities, right? So there's that other side to it, kind of the back-end side of it, which is also very interesting. That was very inspiring to me. NFTs, I think, have always been very interesting. NFTs, I think, are very misunderstood. People associate them with avatars and things. It's a very general purpose technology. An NFT can represent identifier on social media. It can be a digital collectible for the musician can sell to their fans. It can be an avatar. It could represent a real world asset. And so this idea that you could have sort of encapsulate digital ownership and use it as a new computing primitive to build new services, to me, was a very exciting idea. Still is a very exciting idea. I think we're very, the NFT standard, ERC 721 was finalized in 2020. Like, people forget sometimes we're 4 years into it. It's very, very early, and we see a lot of really creative things being done with it. So for me, it's been this sort of steady evolution of like, wow, that's cool. Like, that's, every year or two, some really interesting new thing happens. And for me, it kind of just gets the gears spinning of like, what are the interesting things people could do with these new tools?
Yeah, for sure. I think that kind of...
Sorry, that was not rapid. I apologize.
No, that's okay. We are moving out of the rapid fire section.
I think I failed the rapid part, and I apologize.
We will call that the fire section for this episode. Looking at your book, it's sectioned into 5 sections, and the last section is what's next. And there's a lot to be said there, and you guys could go read the book. There is a lot said there. But I'm curious, especially as someone who works in venture capital, watching the crypto space, I can imagine you're being asked 24/7, what is your focus here? And you're about to be asked it in like a half a second. But if you had to pick one sector to bet big on, which would it be? Like, which one do you really feel like this is it? Like, I'll say for me, I really do see a lot of promise in blockchain gaming. And if NFTs weren't getting such a negative connotation, I could see that there too. But then there's also like the boring, less sexy, like tech that will also succeed in my eyes. But I'm curious, what do you think it is?
I think gaming is very interesting, and I think gaming, if I could expand on that, I believe that kind of the line between gaming and non-gaming will continue to blur over time. That just sort of more of the internet will become kind of existing in virtual worlds. That it could be a game, but you could meet a future spouse in that game or get a job in that game, and the worlds become persistent, and the worlds interoperate, and the world becomes more like I guess like you think about things like the metaverse. It could be just like a thing, the metaverse, or it could be this gradual process that just the internet becomes more immersive, which I think that's more likely. And I think the lines between play and work and such will blur. And so I would agree with you with that caveat that I think it's like games, but then we kind of dismiss games as toys. And in fact, I think games can expand into much more. And I think that is a very powerful area. I also am very interested throughout my career, I have been in new business models for creative people. So one idea I talk about in the book is called collaborative storytelling. And this is an idea that a group of internet users could get together and collectively create the next Star Wars or Harry Potter, create a new narrative universe, and then get rewarded in proportion to their contributions with tokens. In the same way that Wikipedia is sort of a way for people to collaborate and create an encyclopedia, people could collaborate and create narrative universes. And I think that's just a really interesting idea. And it's timely because I think in a world of generative AI, a lot of prior business models that creative people use, like creating art and selling it, will have pressure on it, right? Because you'll be able to just get that for much cheaper from a machine, so it's a very important time, I think, to think about new creative business models. I think creative people will should continue to get paid and have solid sources of income, but they may come through new systems, many of which I think could be developed around blockchains. And that's a recurring theme throughout the book. And I think what you allude to is at the end of the book, the last part, I have 7 kind of deep dives into areas, and a few of those are around kind of media, new models for media folks.
Yeah. I guess investments aside, looking at the general public, which sectors do you think will bring on the most mainstream adoption? Is it one of these 2 areas that we just talked about? Or is it something that like isn't going to be maybe your best investment, but it's like just some random crypto sector? I don't even know.
It's a good question. I think we now know that, for example, messaging and social networking and gaming are just really, really, really mainstream popular activities. So it's hard to believe that something like blockchains could have, broad impact without impacting those areas.
Yeah.
It's just human nature. Humans want to talk to humans. Humans want to play games. Humans want to message, So I think those just have to be kind of some part of the focus. Finance is obviously a very important area. I think the people that are enthusiastic about finance is a much smaller set of people than people that are enthusiastic about social networking and gaming. So it's important. It's important. So there's sort of things that are popular broadly, and then there's things that maybe finance isn't. Most people aren't actually interested in day to day, but it matters because the fees you get charged, the lending rates you get charged, the remittance rates you get charged matters. So I think there's some things that are kind of broad and maybe shallower, and some things that are kind of narrower and deeper. It's hard to pick favorites, but they have different characteristics.
My last question for you, Chris, is if you can leave us with a piece of advice or something that you've carried with you throughout your career in crypto.
Yeah, I mean, I think, I assume folks listening to this are maybe somewhat either potentially crypto curious or tech curious. I think that, I've worked on the internet my whole career. I found it to be an incredibly rewarding area to work in. I find it's always intellectually interesting. What I hope is that people will keep an open mind, that they would, if I were giving advice, let's say to somebody early in their career, I would advise them to explore different areas. I think it's important I wrote a blog post years ago called Climbing the Wrong Hill, which is about this idea that people kind of get stuck in local, maybe you start off as a consultant and you kind of get stuck there and you're sort of focused on getting promoted. But when in fact, a lot of times early in your career, it's good to try different things. And I think it's good to embrace the future. I think that, I think blockchains, crypto, I think the stuff happening in AI, I think VR, I think self-driving cars, a lot of these things may sound jargony today. I remember when metaverse and social networking and mobile was jargony. There would be articles that were oh gosh, those tech people talking about that stuff again. But the reality is it will matter and it will become a thing. And so my advice, and one thing I'm glad that I did and I would advise others to do is, you don't have to fall in love with it all, but I would take it seriously. I would explore it and find what you're passionate about. But that ultimately, there will be new things. The internet will change. There will be brand new kind of mega trends. And probably the most important thing one can do career-wise is to get involved in one of those things and to be optimistic about it.
Yeah. and embrace the future, like you said.
Yeah, I think so.
Yeah. Well, thank you so much for coming on today, Chris. And again, his book is called Read, Write, Own. It's out now, so go ahead and check it out for yourself.
Thank you so much, Jackie.
We'll be back every week with the top news on the crypto ecosystem. Catch us on Tuesdays for interviews with experts in the Web3 space. You can keep up with us on Spotify, Apple Music, or your favorite pod platform, and subscribe to our companion newsletter, also called Chain Reaction. Links to the newsletter and the stories we talked about can be found in our show notes, and be sure to follow us at chain_reaction on Twitter.
Chain Reaction is hosted by myself, Anita Ramaswamy, along with my co-hosts, Lucas Matney and Jackie Melinek. We are produced by Yashad Kulkarni, and our associate producer is Maggie Stamets, with editing by Kel Keller. Bryce Durbin is our illustrator, Alyssa Stringer leads audience development, and Henry Pickavet manages TechCrunch's audio products. Thanks for listening, and see you next week.